Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about HISENSE HA interim report. HISENSE Home Appliances Group Co., Limited, offers a diverse range of businesses and services, including HVAC heating, ventilation and air conditioning, solutions refrigerators and freezers, washing machines, kitchen appliances, automotive air conditioning compressors, automotive integrated thermal management systems, smart home solutions through offline and online platforms. The company operates under various brands such as HISENSE, Ronshan, Kellen, Hitachi, York, Gorange, ASKO, and Sandon. The HISENSE HA stock price has dropped by -11.04% in the past year due to several key events. One major factor was the company's announcement of its 2024 fiscal year financial results, which showed a sharp decline in net cash flow from operating activities, plummeting by 51.64%. This significant drop raised concerns about the company's financial health and sustainability, leading to a negative reaction in its stock price. Additionally, a technical indicator observed on September 10, 2025, noted a death cross pattern for HISENSE HA, which is generally considered a bearish signal by technical analysts. This suggests that a downward price trend may be developing or strengthening, contributing to the decline in stock price. The primary drivers of revenue growth and decline can be summarized as follows. Revenue growth drivers. The company's revenue has grown significantly due to the expansion of its central air conditioner market, particularly in emerging sectors such as industrial and cultural industries. The household air conditioner market has also experienced rapid growth momentum. Additionally, the refrigerators and air conditioners segment saw a 45.6% increase in external sales revenue. The company's overseas transactions have increased by 12.3%, while its operating revenue from HISENSE Hitachi has grown by 5.7%. Interest income and insurance premium earned have also seen significant increases of 40.2% and 10.1%. Respectively. Revenue decline drivers. On the other hand, the company's revenue has declined in certain areas. The washing machines segment saw a decrease of -6,073,543,391.54 compared to the previous period. Cash received from sales of goods and rendering of services decreased by 5.7% in the first half of 2025. Lease receivables have also decreased by 33.5%. While other operations revenue declined by -9.7%. Neutral or mixed drivers. Some drivers have had a neutral or mixed impact on revenue growth. Sales expenses, management expenses, and R&D expenses have increased, but their impact is not clear-cut in terms of revenue growth or decline. Net income and profit margins changes. An overview: the net income of the company underwent significant fluctuations between 2024 and 2025. Initially, it decreased by 57.15% due to various factors such as wealth management and bad debt provisions. However, in subsequent periods, it showed a steady increase. The net income rose by 33% from RMB 1,203,279,155.59 to RMB 1,599,649,129.04 between HON 2024 and HON 2025. Furthermore, it increased by 122% from 2024 to 2025. Profit margins also experienced notable changes during this period. The operating profit margin rose significantly from 43.7% in 2024 to 60.8% in 2025. Similarly, the net profit margin increased from 44.2% in 2024 to 61% in 2025. However, there were some exceptions, such as the refrigerators and washing machines product, which saw a decrease in profit margins. The reasons behind these changes are multifaceted and varied. The company's ability to adapt to market fluctuations and optimize its operations likely contributed to the improvement in net income and profit margins. Additionally, strategic decisions regarding wealth management and bad debt provisions may have also played a role in the company's financial performance. The company's financial performance indicates mixed results regarding its ability to generate positive operating cash flow. While several pages show a significant increase in net cash flows from operating activities, with amounts ranging from RMB 5,321 million to 12,467,487,459.89, other pages suggest the opposite or lack sufficient information. However, the majority of the provided summaries indicate that the company is indeed generating positive operating cash flow, particularly during the reporting period and in comparison to previous years. This suggests that the company's operations are producing a net inflow of cash, which can be used for various business purposes, such as investing in new projects or paying off debts. In conclusion, based on the available information, it appears that the company is generating positive operating cash flow, but with some inconsistencies and uncertainties throughout its financial performance. The company's debt level and interest expenses have undergone significant changes over the past period. The total debt level showed no significant change in 2024 compared to 2025, but a closer look at individual components reveals an increase of RM 323 million from RMB 3,000, 135 million to RMB 4,000, 458 million on page 36. Additionally, short-term borrowings increased by 2,207 million, 460,000 and $12.08, page 135, and total debt increased from 44 billion, 104 million, 55,000, $439.59 to 44 billion, 349 million, 841,000. $825.04, page 149. Interest expenses have also seen a substantial increase of 25.7% from RMB 69 million, 61,921.52 to RMB 86 million, 914,991.88 on page 50 and page 128. The financial expenses, interest expenses, were 51,338,165.27 in the current period, indicating a significant rise compared to the previous period's minus 78,565,182.36. Overall, these changes suggest that the company has taken on more debt and is paying higher interest expenses, which may have implications for its financial health and future performance. Management's outlook. Focusing on growth and efficiency, the company's management is optimistic about its future prospects, driven by government policies that create opportunities for industrial and consumption upgrades. To capitalize on these trends, the company will focus on the new energy sector, providing efficient thermal management solutions to meet growing demand. To achieve performance improvement, management plans to invest in global collaboration and R&D, expanding the company's capabilities and competitiveness. Additionally, the company aims to expand its global market presence through innovative marketing technologies and collaborative innovation with key customers. In terms of operational efficiency, management is committed to reducing costs, improving productivity, and enhancing capital management. This will enable the company to strengthen its independent operational capabilities, reduce reliance on external borrowing, and ultimately drive profitability and competitiveness. The company has a history of paying dividends to its shareholders. This is evident from the numerous mentions of dividend payments throughout various pages in the financial summary. However, there is no indication that the company has engaged in share buybacks, suggesting that it has chosen to distribute profits directly to investors rather than repurchasing shares on the market. Concerns about inventory buildup and supply chain disruption. The financial summary highlights concerns regarding inventory buildup within the company. This is evident from an impairment loss of $73,425,223.25 due to inventory buildup on page 18. Additionally, a minus 2.49% change in proportion on page 20 suggests a decrease in inventory levels, but could also be interpreted as a concern for inventory buildup. However, some contradictory information is presented on pages 105 and 106. The closing balances for raw materials and finished goods are lower than the opening balances, indicating a decrease in inventory levels. Yet there is an increase in raw materials inventory by $20,937,731.43, which raises concerns about potential inventory buildup. In contrast, there are no explicit mentions of supply chain disruption concerns throughout the provided pages. That concludes the financial summary for HISENSE Ha. Feel free to comment below, and I will be happy to answer them when possible.